Joining us right now with a look at the markets is Lindsay Rosner, the head of multi-sector investing at Goldman Sachs Asset Management. And Lindsay, let's talk about what you're seeing out there, what you're interested in, where you think the moves are that after we've got this rate cut, everybody's rethinking things.
Absolutely. So what has been a big prevalent trade has been the idea of T-bill and chill, which is basically stay in T-bills. They're earning you 5% and change. You don't have to do the hard work. Just stay there. And we've very much been advocating this whole year to extend duration because that gig is going to be up at some point in time, right. And that time is now.
Is it too late if you haven't done that already?
It is not too late. There definitely were more returns if you extended duration earlier, but you haven't missed the window. And we're really telling clients that it's important to think about extending now. What's interesting is the first move typically after a Fed cut is actually money into money market funds. You would have expected that it goes out the curve. Actually, first step is in, which is what we saw in 2020. That's exactly what's happened in the past week. And the next steps, which happen later, are extending out the curve to more interesting products with intermediate duration.
And you're seeing that at this point?
We're seeing that. We saw $127 billion into money market funds in the past week. That's pretty big on a $6.5 trillion money market fund world.
Yeah, what's the average been, let's say, over the last year or two? How does that match up?
So year to date, the flows are $500 billion. So it's been sizable, but if you compare 1 week versus what's happened all year, it's been a really significant move. But this is the playbook of what happened in 2020. What's different, though, is that 2020, we weren't seeing a soft landing. And our expectation is this soft landing continues. And in fact, because we got this information from the Fed last week and kind of know a little bit more about the reaction function, we think actually you can be more confident about a soft landing than you could 2 weeks ago.
Even though people are wondering if the Fed sees weakness in the labor markets and other places, and even though you've got the potential for inflationary actions like some of the labor strikes that we're seeing right now, what that might mean for the supply chain?
So inflation is moving in the right direction. They feel much more comfortable, to use their words, they have confidence around it. But it doesn't mean, I think a lot of people are saying the inflation proverbial beast has been slayed. I think that's a bit of an exaggeration. Inflation is absolutely something that you have to keep your eye on, and the Fed has not stopped watching it. What's happened is the concern about the labor market has ticked up. And that softness we are certainly seeing in data. It'll be interesting in the numbers that we get later on this week. Inflation is something they need to watch, but it really is the job market that concerns them at this point in time that could lead to potentially a recession, which, again, is in our base case.
Commercial real estate, that debt has been toxic as far as a lot of people are concerned. You've been quite a bit more positive on that and seeing opportunities there.
Yes, it isn't the entire commercial real estate space that we like. We're very choiceful and choosy in terms of what we pick and what we think works. But certainly rate relief is going to be very helpful to commercial real estate. And numbers that didn't work 6 months ago can start working. I mean, right now we've got 80 basis points of cuts priced in for the rest of the year. 2025, there's 100 basis points of cuts priced in. That can be some serious rate relief. When you say commercial real estate.
When you say you're picky about where you would find these things, is that in certain categories? Is it in certain cities? Is it areas? What are the places you like?
All of the above. Specifically, we really like multifamily. We like logistical warehouse, the places I always say where the Amazon boxes go before they go to your doorstep. But we even are finding interesting office properties. And in general, you hear the office is dead, nobody's going back. That's hyperbole. There are absolutely interesting buildings that people want to be in, want to work in. And so it's about picking those trophy offices. And to your point on cities, it's typically the better cities, I would say, the more active cities in the country.